Today we're talking about bank transaction accounting. What exactly is that? What does it mean for your business? When you really should avoid recording transactions in this way, and how you can deal with the potential for duplication in a way that will help overcome both data entry and data management. So what is bank transaction accounting? Well, bank transaction accounting is when you use purely the money coming into your bank accounts to record transactions. So in accounting speak, we'd say you're using those as the original source information. So if you're selling on platforms like Etsy or Shopify, if you use credit card processors, so if you use Stripe, PayPal, Square, those sort of things, they all charge you a fee before they deposit that money into your bank account. So say Eventbrite, if you run workshops, customer books to Eventbrite charge a fee, and then Eventbrite transfer that money to you at the end after the fee. So it's tempting to just record that as the transaction. So if the workshop fee was $100 and Eventbrite charged 5% for credit card processing and fees, you're going to get $95 into your account. Now it's really tempting to just record that $95 because that's the income you received and that's the profit. But it's not actually giving you an accurate information on how many fees you've paid, what the expenses in your business are, and the actual income that your business is generating. Because if you're only recording that $95, you're missing out on recording $5 of fees and actually $5 of income. Yes, I see the net profit is the same, but it's really not informing you about your business. Now, there really are three specific scenarios where this really isn't appropriate. If you're just a small sole trader and you're reporting as an individual through tax, it may be okay to record it this way. If bookkeeping really is the last thing, and if this is the one thing that's going to stop you doing bookkeeping, it may be okay, but please talk to your tax accountant first. But the three scenarios where you really can't use this is, the first one is if you're near the GST threshold. So some of the major platforms like Etsy actually charge almost 10% fees before they send you the cash. So you can actually, if you're doing $75,000, which is the GST threshold of sales, after Etsy have charged you their fees, you're actually doing $81,000 of sales on Etsy. Now, that's a big difference, and that means you should register for GST when you haven't registered for GST because you're only seeing the 75 or the 74,900 amount. So the first one is when you're near the GST threshold. It's really important to be getting the accurate total on the income that you're making. The second scenario is when you are registered for GST, because some of those platforms will stop charging GST on their services. So Etsy, for example, once you're registered for GST, no longer charge you GST on the digital services they provide to you. So if you make a sale, for example, of $100, you collect $9.09 of GST on that sale, on the $100. So we divide by 11 to give us a GST total. Now, if Etsy took, let's just say $10 of fees, and you record the $90 coming in as GST on $90, you're actually only going to record, $8.10, $8.09 of GST. So you've actually got the incorrect total. So you're paying the ATO $8.15 or $8.10 when you should be paying the ATO $9.09. Now, it's not a huge difference on an individual transaction, completely appreciate that. But as you add those transactions up over $75,000, the difference becomes, $6,000 or $7,000, which is significant. So you really should be recording the total sale and then the fees separately. So the third scenario, when we want to make sure we're recording this original transaction, then fees to give us net profit, is when we're doing export. So if we send any products or any services overseas, GST isn't applicable on those services. So if we continue with the Etsy example, if you make a $100 sale for an international customer, there is no GST on that sale. That $9.09 that you worked into your pricing, because we can only set one price on Etsy, actually becomes profit. So you could take that $9 that you've and inadvertently recorded as GST if you're not recording the transactions individually, and take it into profit. Now, who wouldn't want to make more profit with the same amount of work? So the main problem that people come across when they try to do this is they get all these transactions. So if you record every single sale in your Etsy shop and you're, registered for GST, can actually be quite a lot of transactions. But we don't have to record every single sale. We don't have to record every single processing fee that's gone through Square. For example, if you're at markets and you're doing 100, 200 transactions at markets, we don't have to record every single one. Instead, what we can start doing is doing a monthly total. As long as we keep the source documents, so if it's Square, for example, we get an output of what went through Square, we can then import that into our bookkeeping as a monthly total. So we can put a monthly invoice in for the total sales that went through, and then on that invoice we can also add the fees we paid. And if your bookkeeping software doesn't allow a negative on an invoice, you can actually put a separate bill in. And exactly how you set it up is going to depend on exactly what your system is, whether you use Wave or Xero or QuickBooks or MYOB, or you're doing it in a spreadsheet. The exact mechanism is going to depend on that. So you may set up what we call a clearing account. So Etsy payments build up like accounts receivable, and then when Etsy make the payment to you, that reduces the balance. Or we might set it up with invoicing and contra accounts for the bill itself. But there's a few different ways we can achieve this right income, right fees. So we're getting the right numbers for GST, we're getting the right numbers for GST threshold, and we're getting the right numbers on what your business is actually producing and paying out without going overboard, having millions of transactions and potentially duplicate transactions. There is something there just to be aware of. So if you are putting invoices in, you need to be putting those as payment for invoices when the cash comes through. You're using a clearing account, just make sure you're clear on exactly how that works, because what I don't want to see is Etsy sales or PayPal sales coming through as a total, and then the bank money coming into your bank and that coming through as a second total and duplicating. So we do just need to be aware of how exactly that's working in our software in order to make sure we achieve it accurately.